Wall Street today closed higher with the Dow, NASDAQ, and S&P all showing gains at or near 1%. This after stocks were hit hard by 3 straight days of losses. Indeed, yesterday was the market's worst day since 1987. What's happening on Wall Street and what does it mean for the economy as a whole? For that, we welcome Jim Rounds, President and CEO of Rounds Consulting Group. Jim, good to see you. Thanks for joining us.
Thanks for having me back.
So why are the markets acting like this?
Well, I think part of it is because of people in my profession. We've been predicting, I guess, 8 of the last 0 recessions over the last couple of years. And so at some point, we're going to run into that, but people are starting to look for it. And we had a big signal this past week with a relatively weak jobs report. And people are concerned about the Fed reacting properly, but it's not as bad as I think it initially appeared. It's playing out a little bit like we expected.
Okay, this jobs report obviously seemed like it was We've had bad jobs reports. We've had good jobs reports. We haven't seen the market go whoop-de-doo like this. Why the difference?
So my rule of thumb is if you're at the tail end of an expansion, if you're still generating about 200,000 jobs a month across the nation, that's still a solid number. If you fall below 100,000, you get into that territory where maybe there are some signs of a recession. We had 114,000, and we also had another prior month revised down to, I think it was 108,000. Mm-hmm. So we're hitting that territory where I start to put more weight on the jobs report than I normally would, and I think that number scared some people.
Purely stock market question here. The tech stocks, did they run up too fast? Too much too fast?
Yes. But it's really across the board, even with all the adjustments that happened. Just looking at the data right before the show, Dow is still up double digits. S&P, NASDAQ up over 15% compared to the prior year. So I think this is more of a correction. I think it's people taking some profit. I think it's people trying to jump in on that initial signal that maybe we are going to slip. And then what you saw today was people coming back in and saying, I don't think we're going to have a downturn. I'm going to wait a little bit. Maybe I can get some good prices. So it gets kind of back down to basic supply and demand issues and pricing.
But these corrections, sell-offs, if you will, how much do they actually impact the economy?
Well, they'll impact individuals. So if people are very worried, they're going to cut back on spending. But it also impacts the economy because if you take the jobs report in combination with everybody kind of freaking out and the Federal Reserve Board listening to that, they might be more influenced into cutting rates a little bit sooner than they would. I think that they will. I don't think they're going to drop rates. I think some people are factoring in maybe a full percentage reduction. I think they're going to go a little bit slow and steady this time because I really feel like this wasn't falling off a cliff. I think it was a correction.
But did the Fed, I'm hearing a lot of this, that the Fed simply waited too long to cut rates. That a valid point?
Yeah, they've done nothing right for the last several years. They kept rates at 0 for too long, and then they said, let's raise it so quickly that we can actually cause some collapse of banks. And then they raised it so fast, it made it where people can't even move from one home to another because they had the golden handcuffs of being locked in at a 3% mortgage rate, and now they're going for 7%. If you wanted to upgrade your home, you're gonna have to spend an extra $100,000 on it just because of the interest rate itself. So they need to start thinking about this, and I'm very disappointed because this is a group of fairly prominent economists, and if you look at the data, it's not that complicated. It's always better to go slow and steady. You don't want to cause uncertainty. You want to give signals, like Greenspan used to have all sorts of signals that he would give. That actually helps stabilize how things change, and we have not seen that.
But how much does the Fed watch? I know they watch inflation like hawks, but as far as the stock market is concerned, how much of an influence?
I think it's not. I think it's a secondary influence. So the jobs report would be the main one. Then the next inflation report will be the next, and then there'll be some pressure because of the change in the stock market. But from what we saw from how it fell, I was expecting about half of yesterday's losses to come back today. It wasn't quite that, but it was close. I wouldn't be surprised if next week we recovered 3/4 of what we lost over the last 3 or 4 days. Just because, again, I feel like there's a lot of movement. There's going to be people looking for some good opportunities, and I think some money's going to come back in.
So I'm hearing a little bit of poo-pooing as far as recession is concerned. What about a pre-recession? I mean, are we still kind of on the precipice here?
Yeah, if you don't just focus on the stock market and you look at the employment numbers, we're getting close to the point where I wouldn't predict a recession this calendar year, but I think we're going to have a mild one next calendar year. But the good news is that in Arizona, I think we're going to be better positioned. I don't think we're going to see as many job losses. We have a lot of pent-up demand for work, so you're going to see businesses taking the help wanted signs out of their window. That's different than laying somebody off. So it's not going to impact the government entities as much. It's not going to impact the individuals as much. But every recession is painful. It just won't be as bad. We typically outperform the U.S. During good times and bad, and that includes recessions.
As far as the world is concerned, the Japanese yen is strong, and that's got everyone all worried. What's happening in the U.S., is it impacting the rest of the world? Is the rest of the world impacting the U.S.? Which one?
It's both, but to some extent, all roads still lead to the United States. And I still feel like what happens here has that trickle-down effect to other countries. And like we've talked about before, you have a recession not just because of one minor thing. It's usually 3 or 4 or 5 big things happening, maybe even a shock. So we're at 1 or 2 mild things happening. If we start to see the jobs numbers go below 100,000, we see inflation maybe a little bit higher than we would like to see. We don't see action by the Federal Reserve Board. Then we might get into that point where we might have a mild downturn.
But you do expect action by the Fed, and if not a full percent, pretty gung-ho here for the rest of the year?
Yeah, I think so. Well, gung-ho from doing nothing to taking some action. 1/4 point, 0.5%, I think is the most that they'll want to go.
All right, Jim Rounds, Rounds Consulting. Good information and good to have you here. Thanks for joining us.
Good to see you.